Hi everybody, Alex Ploy here from Expert Forex. I hope you enjoyed today's Forex trading video. In this lecture, we're going to be looking at some common mistakes channel traders make. Now, channel trading is actually a very simple technique, simple rules, but there are some tricks and traps that traders fall into that we need to be aware of. So let's start with the first one. The first one is sometimes not that obvious, but you do need to update your channel on a regular basis. So let's have a look at the chart that's on the screen at the moment. Looks like a beautiful channel here. It's bounced once, twice, 3 times, 4 times, and it's had a nice bounce here. And what appears to be happening here is a failed swing. It's not going to the other side of the channel, and we've got a failed swing, and it seems like that would be a great breakout point. So you would put your pending order more or less there. But now at the same time, sometimes it's very easy to overlook a new turning point that's developed. And if I now delete these lines and draw some new turning points, it'll be a lot clearer. So we have a definite turning point over here. This price action that's happened has actually created a turning point. Those are very strong rejection spikes and could be a turning point. So this particular channel can be redrawn in the following way. So we could have 1, 2, 3, and going for 4. And 4 could be a bouncing point going to 5. So sometimes even experienced traders forget to update their channels by the latest turning point. And this example is a pretty good one because the first channel looks so good and the false swing looks so good, but you can actually redraw the channel pretty quickly after that. So that's trading error number 1, failure to update your channel on a regular basis. The next bad habit or error that channel traders often make is to identify leg 3's turning point prematurely. On your screen you can see an example of this where there's been a bounce number 1, a bounce number 2, and currently it looks like there's a bounce number 3, but so far the rejection hasn't happened. So this is not point 3 yet, and a lot of traders rush to find point 3 too quickly. There must be a good rejection. The price must be going in one way, and then the rejection must happen in the other way pretty strongly to result in a turning point. So a lot of traders often draw the third turning point prematurely. Which leads me on to the next error or bad habit that traders try to do, is they try to trade leg 3 to leg 4. And that is one of the most insecure legs, because if you look at the screen right now, if we assume this is point 3, it can carry on. So we don't know that this is point 3 yet, and if you try and trade this leg, you're going to get into serious trouble. So let leg 3 mature to a point where we know that it's a turning point and that we can then treat 4 as the expected reversal point. So don't become impatient, and that's one of the reasons why I like using 24 current, 12 on a 4 hour and 12 on a daily, so that I've got lots of choice. I don't need to become impatient. Trade the channel trading technique. Be patient to wait for the number 3 turning point, and also don't trade leg 3 to 4. The next error or bad habit that channel traders get into is they try to create channels where channels aren't very clear. Again, if you're trading a lot of currencies and a lot of time frames, you don't get desperate to try and find a channel on every single chart. But in the chart shown on your screen at the moment, one could say that this is a possible channel. You could say this is a potential channel. You could say this is a potential channel if you want to. And there's lots of ways of looking at that particular price action, but If you can't clearly see the channel price action and draw the channel without guessing, then just move on to the next currency and try and find a more defined and clear channel. Don't try and squeeze blood out of a stone in terms of that. Then the next error or warning is not to trade channels that are too steep. On your screen you can see a pretty steep channel. There's a turning point over here, turning point over there, and a potential turning point over there, and not proven yet, but it is setting up for a very steep channel. The channel indicator is actually showing a very steep channel. Just be wary of trading steep channels. Also, be wary that there are a number of interpretations of channels, because if you look at exactly the same price action that we've just looking at right now, I would draw the channel something like this. So you would have 1, 2, and 3. It would go halfway to the number 4 and create a false swing, and this is in fact a false swing breakout. So that's another interpretation of this particular channel. Be aware that channel trading can be subjective, and different traders can see different channels from the same chart. And then the next error or bad habit that channel traders can get into is to trade against the trend in a sloping channel. On the screen you can see a channel that's pretty good. It's had a lot of bounces, 1, 2, 3, 4, looks like 5 at the moment, but because this channel is sloping upwards, you would tend not to trade the against the trend leg of the channel. You would trade the with the trend leg. So just be wary of trading against the trend trades when there's a strongly sloping channel. Then the last one I need to warn you about is don't try and draw the perfect channel. Now you can get pretty close to catching 100% of a move with the almost exact bouncing points that channel trading provides, but in the end the philosophy of channel trading is to capture 95% of the price movement in the channel lines. So don't try and draw absolutely perfect channels. On your screen you can see quite a hazy price movement, and this almost falls into the classification of not trading when you can't see a clear channel. But if you look at this particular price movement, you can see a sort of hazy channel going up something like this. So as you can see, it's not perfect, but it's pretty good, and therefore don't try and draw perfect channels. Sometimes your channel bounces will just miss the channel line or just go over it. So what I like doing, and I've shown you this before, is I try and draw internal channel lines, something like that, which capture 95% of the moves. And these lines also make sure that I don't miss too many close misses. So I would draw a secondary channel within the main channel and use that for my target setting and sometimes for my entries, depending on the time frame and the channel sizes that there are. I don't want to encourage stops that are excessively big, but this sometimes helps. So don't try and draw absolutely perfect channels, although that is possible. Remember, there is an element of a margin for error with channel trading, and take that into account by trying to capture 95% of the price movement within your channel lines. Ideally you should capture 100% of the price movement in your channel lines, but 95% is good enough. So I hope these tips will help you with your channel trading. Let's move on to the next lecture. Thanks for watching this video. You can find links and more information about the video in the description. If you found it interesting, please like it and share it with your friends. Also, remember to subscribe to our channel so that you don't miss any future Forex trading videos. So from me, Alex Deploy, cheerio.